September 12th, Monday, market analysis. Stan Ehrlich, good morning. It's 9:12 California time. We gapped up again this morning in the stock market indexes and had a little bit rally, a little bit more than I was expecting. You might recall I was looking for something around 405 to maybe 410. We have had a high this morning of 411.73. Now we've already come down to approximately the opening and almost made new lows for the day. Not quite, very close. Looks like it matched it by the tick, and I think it's going to make new lows right away. That same statement can be made for the DIA, the Dow Jones, as well as the QQQ and the 2000. They all have a very slight gap to close. The spiders is a little bit larger. Not counting the fact that Friday the market's also gapped up, and that gap is still open. Remember, I like to say that gaps are like a black hole in space. They tend to suck the price action back into where the gap is. So I am definitely expecting a dip down to at least, if not a lot lower, frankly, the high of Friday, which was 400.86. We're now at 409.21 at the moment. So about a 9-10 point break to start with. I think, as I've said the last couple days, that the high of this rally, which this morning was a little higher than I expected, looking for 405 to 410, it came up to 411 and change. Again, the exact high this morning so far has been 11.73. I think this high today, and I do think today is the high, is going to be the beginning of the next significant, substantial leg down to, at a very bare minimum, challenge the low at 388.42 made on September 6th. But that's not the long and short of it. The bigger picture is this is almost the middle of September. We're looking at October for the next month. October is the month when we frequently have, in the last 30 plus years, about 80 to the low 90 percentile, we almost always have a major low. And so I'm expecting this low at the early part of September to be taken out completely, and we will potentially challenge the lows that were made way back in June, and that low was 360.17. Again, we're at 409 and change. That's a very large break. So in the month of October, I am expecting below 370, maybe even below the 360s. Okay, obviously I'm bearish. I'm looking for a test of the low of the whole darn trend for the whole year. And I think the low is going to be in October for reasons I just gave. That's going to be for the DIA, the QQQ, and the 2000 as well. All of which are dropping off at the moment toward the low of the day, only made a few minutes ago. Let's look at a few other things. We have a buy signal which was generated last week in the, excuse me, let me make this more obvious. Last week, September 7th, Wednesday of last week, we had a bullish engulfing in the futures contract, the E-mini, the ES, and that has proved to be a very, very good signal, but we'll probably be getting stopped out of it very, very soon. Also, the exact same day and the exact same reason, we had a buy signal in the NASDAQ futures, the NQ, and it got filled at the same time, probably the same minute or two that the E-mini got filled, and it is profitable last Thursday, Friday, and today so far. They were up, and today up again so far on those futures contracts. Let me go to some futures contracts now. I want to point out that today, brand new buy signal in natural gas. We have a low today lower than the low of Friday in NG, natural gas. Today's high is higher than Friday's high. That defines an engulfing. Doesn't say whether it's bullish or bearish yet. But the engulfing we have this morning is obviously a bullish one because the current quote is significantly higher than both the high of Friday or the close of Friday. And in our Ehrlich reversal strategy, we turn that bar green. There it is, our buy signal. So depending upon what the range finishes, how big the range is at the end of the day, we will place a bid to go long for the next 3 days in natural gas. This is the exact opposite. On August 23rd, we had a bearish engulfing. It got filled 3 days later, and we dropped off very substantially. Good signal. We had 3 of them around the time period that the market topped out. Now, yes, there was a bearish engulfing on the exact high day in natural gas, but the problem there was we weren't overbought within a few days. When we have a red daily bar or candlestick, yes, you were overbought within the proper number of days or the exact same day. So there's the combination. Overbought, oversold within a few days, and the bullish or bearish engulfing generates our signals, which has a nice track record, darn good track record. I don't see any other red or green daily bars so far today on any of these other charts at the moment. Our sell signal in 10-year notes is still doing well, and that was on the top of the market August 2nd, and we have a very nice trade going, to say the least. We had a huge long-term trade August 4th in 10-year notes, again back in August of 21, a year ago plus, and it only got out of that trade finally in July of the next year, a couple of months ago. A whopper of a trade. Apparently took about 14 plus points out of the market. Big points, the large ones. And now we're about almost 5 points profitable in this particular trade. Okay. Same thing goes to the 30-year long bond, by the way. I'm not finding that chart at the moment. Not that big a deal. Crude oil. I thought that when we broke the support level, that horizontal line, we would start another leg down in the bear move. We got some great sell signals on the top of the rally, which turned out to be a double top. But so far I'm disappointed. I had thought this market would stop at the horizontal line or maybe around 85, 60 or 70 or something. We're now 88.61. It's not that it can't or won't stop rallying very soon and turn down again, but so far it hasn't. And it's getting a little stronger than I expected. So I'm waiting. I haven't got any official signals, just an opinion, just general technical analysis for the moment. And I do keep doing that, don't I? That's unfortunate. Here's that long bond I was talking about. Sell signal smack dab on top, buy signal smack dab on the bottom day of a long-term bear market. Another buy signal to work for a short period of time, but not spectacular. And we had a sell signal close to the top of that rally. So October, I stressed a moment ago, is the month of the year, and I have no idea why. Some people say elections makes a little bit of sense, but not completely. They're only once every 4 years. This happens almost every damn year. Here is the history of it, going back 30 years. Nope, 20, what have I got? 1993. Yep, almost 30 years. I know you can't see the details, so I'll zoom back out again. For the last few years, the arrows point to the lowest low in the neighborhood of October, if not in October. Most of them are in October. We don't know about this year yet, do we? That's next month. But we're certainly heading in the right direction on the average. Remember, this bear market started approximately the beginning of the year. The spider, the high was January 7th. All right. The euro dollar. Well, I'm sorry to see it's rallying. No surprise. I like the euro to go down more because I like to go to Europe when I get a chance. It's currently 101 and small change, and it's bouncing off lows just a little bit under par of 99. No particular reversal on the bottom or the top exactly here, but we did get a buy signal. It was a little too early. Again, a little too early, but my signals sometimes occur not necessarily on the top or bottom day, which is frequently, but very, very close. We got a sell signal on the top of the rally right there. That was great. A buy signal almost on the exact bottom there, and a variety of others. Lastly, Miss Piggy has an inside trading range, live hogs. I've been watching this since I started these recordings a few weeks ago. That sell signal has worked very, very nicely. I'm waiting for it to make a new low for the trend down. We're not out of this particular trade as yet. You can see the equity plot here. It's doing very well. By the way, our new short sale was within a tick or two of the exact high of the day after the signal. And that's how our Ehrlich reversal 3 gets into a transaction. It waits for the next day after the signal day, or another and another. So up to 3 days after the signal, we may be able to get long or short. In this case, it got short the next day, which is very, very, very common. All right. Thank you very much for your time. Stan Ehrlich. Have a great trading day.